So when the mainstream media and the banks start to talk about Bitcoin, it's then that we'll know the ship is sailing. And it'll be sailing to the moon. Let's see what JP Morgan, CNBC, and Fidelity are saying, and let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So there's just so much happening, so much going on. I think this is Thursday, where are we, the 25th. You know, there's been all these conferences happening, there's been consensus, and there's been a lot of news coming out of New York City, there's been a lot of news coming out of everywhere. We've seen billions of dollars enter the cryptoverse inside of Bitcoin, into all of these other alternative currencies and systems such as Ethereum and Ethereum Classic and Litecoin, and just everything across the board. We've seen a ton of investment money go into that. And at the same time, you know, breaking just moments ago, I just saw a huge drop, most cases double-digit drops across the board. We'll take a peek at that, but as I've mentioned in the past, the market is going to go up, the market is going to go down. And with that, it's going to be driven by typical market dynamics. It's also going to be driven by fear, uncertainty, and doubt, as well as hype and hope and inspiration from the other end as well. And so as this is happening and the market is going up and down, we want to recognize that Bitcoin is limited. There's only about 16.3 million Bitcoins in existence, and not all of those are accessible to people in the market because many of those have been lost. There's never going to be more than 21 million Bitcoins. And so as the value of Bitcoin is going up and down, specifically for Bitcoin, it's limited. As there's a greater demand for Bitcoin, the supply is barely going to change and become zero. And so long term, we want to buy and hold Bitcoin. and we've known this, and a lot of people have expected that price to hit over $1,000. And I don't think anyone expected Bitcoin to grow this fast, this quick. Even now, we're seeing Bitcoin crash at, this very moment, $2,300. And if we saw Bitcoin crash at $1,500, it would still be significantly up from where it was before, because we know where this is going, and we know that no matter what happens, the demand isn't going to go away. And it's not just the crypto anarchists, it's not just the crazy tech geeks, it's not just the people in the third world or second world or first world countries where currency is being devalued and people are having a hard time using their country's currency to purchase food. No, we're hearing it from the governments of the world, from Japan, from Australia, from Russia. We're hearing it from the Ivy League schools of the world. But that's also expected because they want to help their leaders be ahead of the game, right? But the real canary in the coal mine, the real, notice, right? The red flag, the flare that something is up and things are about to change rapidly is going to be when the banks start talking about Bitcoin, and it's going to be when the mainstream media starts talking about Bitcoin. So the good news is that the examples of who we have today, we could get even stronger, and this could be more and more prevalent, the news that is going to be coming out. But the fact remains is that the bells are going off, the alarms are going off. We're seeing talk of this in Forbes and CNBC, and it's only a matter of time before it's on the nightly news. So without further ado, let's take a look and see what's going on in the market, and let's take a quick look at some of these news articles, and let's discuss. All right, so I want to refresh this super quick, see where we are at. So I did a video earlier today, and those numbers were looking really good. Bitcoin was up. Quite a few of these currencies were up, and now we're seeing, except for Ethereum Classic, which this will probably fall into the red too, we're seeing red across the board. Look at this. It's like 90% of this screen is just a bloodbath. And not just a little bit of blood, not just paper cuts over here, but we're looking at some high-level double digits. Again, I sort of expect this with Monero, because Monero did this dirty trick this weekend that really upset a lot of people. But, you know, Monero 25%, Dash down 17%. NEM and Ripple, I sort of expect that to happen. But with the market cap, Ethereum has increased. For Ethereum to be at 9% even, it's just a significant amount of money. I think that this is going to create a buying opportunity. So, you know, what I would like you guys to consider as you're making decisions for your family and for yourselves, let it be you're doing whatever you're doing with your financial advisors and investing. I don't know, that's all of your business. This is just my opinion here. But there's a lot happening in the marketplace. I think I lost my train of thought. I forgot where I was going with that. So, but moving on from the market, yeah, the market, it's just going to kick back up. Oh yeah, fear, uncertainty, and doubt. So, and then versus the hype and inspiration. So this whole past week, when there was a lot of hype and there was a lot of hope, and everyone was buying, that was not the time for everyone to be buying. That was not the time to be purchasing when we're at the top of the market. When that's when all of the people who are purchasing who you know, are trying to get in, right? Because what goes up goes down, what goes down comes up. So when everyone is buying, that's when you hold. And when everyone is selling, that's when you look at the market, figure things out, talk to your financial advisor, and potentially make a purchase. Because when there's fear in the market and everyone is selling, that's usually the best time, that's usually the best opportunity, from what I hear the experts say, for people to invest, right? So when 2008, when the market crashed and everyone lost all their money in the stock market and all the stocks crashed, you know, if you would have purchased stocks from companies that you'd have a reasonable assurance would still be around, then those stocks saw exponential increases in their gains, because those companies aren't going anywhere, even though, you know, a lot of other companies did. The market is still going to go on. And so this is still going to go on. So when there's a lot of hype and hope, be careful about buying. And when there's a lot of fear and a lot of selling, that's when you want to look for opportunities. So moving on, this weekend we heard JP Morgan Chase is going to be integrating Zcash technology with its enterprise blockchain platform. And so it's really interesting, because Bitcoin was once, and to still some extent is tainted by that whole Silk Road industry and the what was happening with the buying and selling of illegal marijuana, narcotics, and probably other heavier narcotics as well. And yet here we have JP Morgan Chase is going to be integrating Zcash, which is a privacy coin, adding all sorts of privacy and anonymity into the JP Morgan Chase blockchain technology. This isn't Bitcoin specifically, but it's really interesting how everything is connected and all the roads lead back to Bitcoin, especially since there's some extreme similarities with how these systems work. But that's JP Morgan Chase. And then here we have the article from CNBC.com. So we touched upon this at a high level in today's earlier video. But here we have it from, is it the horse's mouth? So someone's mouth. I guess it's CNBC's mouth. And so from CNBC.com, from the 24th, yesterday, Bitcoin surges to record above $2,500, significantly more than the price per ounce of gold, bringing the 2017 gain to more than 150% since we started Bitcoin at about just under $1,000 in the very beginning of this year. And then they're just talking about how it's rising in value, digital currency that is the future of Bitcoin investors are excited about. I thought this was interesting. The digital currencies, more than 150% surge this year, is far more traditional. Is far more than traditional safety assets, and so they're saying it's more than the safety assets, and I wonder if this is going to pique people's interest and then sort of help them recognize that Bitcoin, in my opinion, and a lot of other people's opinion, is actually much safer of an asset than anything in your bank, because all the money in your bank can be lost to risk. It could be lost due to inflation. It could be lost in all sorts of number of ways, where with Bitcoin, you can own and control and manage your own wealth. You can be your own central bank. And that's what more and more of the masses are going to recognize as Bitcoin start to gain in popularity, and people are interested in having control of their own money without worrying about losing it to third party holding companies like exchanges and like banks. So the article does go on to mention the political stalemate with Bitcoin over the scaling solution. And so Andrew Keys, the head of global business development at blockchain software developer at Consensus, was saying that the price increase has to do with the agreement. I don't think Andrew. Well, maybe the price increase was due to that, but it's as we all are aware who are watching the videos from this channel and paying attention to what's going on in the community, there's not really an agreement if it's only 86%. It's not really an agreement if it's 90%. We really need a significant agreement from over 95% of the Bitcoin community to have an agreement, if not 99.99%, because otherwise we can see a fork. We can see two different Bitcoins, and so there's not an agreement. Again, 56 companies, 83% of the Bitcoin miners supporting the Bitcoin scaling agreement coming out this past weekend. 83% is not an agreement. This is a situation that can set us up for having two Bitcoins. Not something that I advise. I think having one Bitcoin is the way to go. And I think keeping the power distributed is better than allowing fewer companies to have more control, which is my understanding of what would happen if and when the block sizes are increased. So not everyone is on board with the agreement. We just went over that. Regardless of the digital currency is gaining more attention in the United States, especially from high-profile institutional investors. So the banks are hearing it from all the investors, and it's only a matter of time. The banks are just recognizing they're recognizing that blockchain technology isn't going away. They've tried to do away with Bitcoin. They try to do away with this technology, and now the banks that are going to be leading the future, the institutions leading the future, are going to be the institutions that adopt and integrate with the public blockchain, with the public blockchains. The banks that don't integrate will be disrupted, and the banks that do integrate will survive. For better or worse, no matter what your opinion on fiat money is and what your opinion on the banks are, if the banks integrate with the market, as in with every industry, then that institution will have a much better chance of surviving. But let's look at AOL. We had the internet, and I spent, a decade trying to teach people that if you want to access the internet, you don't have to open up AOL, right? They would have AOL. They would use AOL to create that sound with the phone line, to tie up the phone line with the internet, and then you would be in a cumbersome experience having to use the internet through this program, this AOL browser, which was just AOL's take on what you can see and what you could do, and all the mainstream media companies would have their keywords, and the browser was its own search engine, and it wasn't a great user experience. And so people recognized over time that you can open up internet, and then separately you could then open up a Netscape browser, and it would be like having access to this whole other internet. There was just more available, and it was available differently. and it was a different experience, and it was a preferred experience because it was open source, and because it was distributed, and because it was connected to everyone, for everyone, by everyone, and you were a part of that. With AOL, it was just a box you were given to explore, to view the web, to interact with the web, and that's what I see is the future with Bitcoin and the blockchain space. Is that the companies that try to overtake the space and just have their private blockchain, it's not going to play well with the rest of the kids on the playground. It's not going to merge well with the rest of the systems that will be open source and integratable and non-proprietary. And just like AOL had problems succeeding over time, the companies that keep that AOL philosophy will definitely have a difficult time here as well. So moving on the CNBC article, we see some connections being pointed out between a Bitcoin surge and the drop in the Shanghai Composite Stock Index. So I don't know if you know about this. I'm not even sure if it's mentioned here specifically, but the Chinese, I believe the Chinese currency was downgraded by Moody's, which is a major event. It's something of this nature for China I don't think has happened in, I heard, 30 years. And maybe the mainstream market and traditional markets won't care, but to some degree, there are a lot of investors that do care, and that creates a lack of confidence in the Chinese yuan, on top of an already existing lack of confidence in the U.S. dollar. I've seen some charts showing sell-offs of the U.S. dollar. I've seen charts for 6 months plus talk about sell-offs of the Chinese yuan. And so when investors are selling dollars, and so this might not make sense to you if say you live in America and all you dealing with is dollars. At a global level, people are buying and selling dollars like they're buying and selling stocks. And so if there's a ton of dollars that are being sold into the market and everyone has all these dollars, and that's adding on to the inflation that the dollars are experiencing. And so that experience of selling off dollars is happening in America, that's happening in China. We're seeing investors and out of the CNBC article talk about the risks of financial instability, the risks of political instability, both in America and across the world. And the result of that is that lots of investors, lots of people are taking their money and taking it out of banks or out of dollars and putting it into things like gold and cryptocurrency, which has just had a percentage of return that dwarfs the percentage of return of I think every other asset possible and imaginable, even with the pullbacks that we're going to be seeing. So this goes on to say Shanghai Composite down 4% year to date, and it isn't the only global asset that's fallen, while the value of Bitcoin has more than doubled in price. And so here there's a cool little chart, and so this is really interesting. We see the value of Bitcoin up 149% year to date. We see Apple stock up 32%. The MSCI World Index, we see gold, as I was mentioning just a second ago, up 8.8%. That's great. That is such a good return on investment for year-to-date returns. It's just when you compare, gold to Bitcoin, or Bitcoin to anything, it doesn't look good. We see the Shanghai Composite down 0.4%. This is what the article is talking about. Crude oil, of which the petrodollar is connected to, down 4.4. U.S. to Japan, U.S. dollar index, USD to MXN, down. It's just, at this point of time, isn't looking good for any of these other asset classes. And so keep in mind that the article we're reading from right now is at CNBC.com. This isn't from Bitcoinist or CoinDesk or Cointelegraph. This is CNBC.com. So Kelly and other analysts expect Bitcoin can one day replace traditional safety investments such as gold. And so just think about that. The audience, recognize the audience for this is someone that isn't involved in cryptocurrency, that has no understanding or a negative understanding of Bitcoin more than likely. And more than likely they understand gold and have attributed value to gold to some degree. And now they're reading that Bitcoin can one day, that they expect Bitcoin to one day replace traditional safety investments such as gold. It's just unbelievable. This is what the mainstream is reading as of May 2017. And that's what people are starting to realize. It's more than digital gold. So moving over to Bitcoinist, we have Fidelity Investments will add Bitcoin to its website. All right, so someone was asking me recently if people are still going to mine Bitcoin, and or if new people are going to mine Bitcoin. And if companies are people, then the answer is yes, because Fidelity Investments is supporting Bitcoin. Fidelity Investments is mining Bitcoin, because Fidelity Investments recognizes that even though the creation of new Bitcoin is only 6.5 Bitcoins, or is it, am I getting ahead of myself? Is it 12 and a half Bitcoins? Sorry, I'm living in 2012 right now. It's 12.5 Bitcoins, and they recognize that that supply is going to get cut in half in 2020. So every 10 minutes right now with the mining, 12.5 Bitcoins are created. In 2020, that rate of new Bitcoin supply gets cut in half again to 6.25. And even though the new Bitcoin being created for the miners is going to get cut in half to only 6.25, companies like Fidelity are recognizing there's still going to be incredible value of mining it, because even though the cost of mining it will increase as more companies are mining it, the value per Bitcoin is projected to exponentially increase over time. And these aren't just my thoughts on this subject. These are, again, the thoughts of very accredited investors and institutional, traditional investors and institutions that are seeing this. Places and companies like JP Morgan, outlets like CNBC, and then other investment companies like Fidelity. And so, let's see, was there something in here I wanted to go over? There's a lot of information in the article. We have a quote here. It will fundamentally change market structures and maybe even the architecture of the internet itself. So, blockchain technology isn't just an efficient way to settle securities. It's just what the industry leaders are recognizing and how they're positioning their companies to get ahead of this is then going to create the infrastructure for the usage, and the demand of all these different cryptocurrencies, which then all lead back to Bitcoin, which has an extremely finite supply. And so ultimately, if we get ahead of the game and we have Bitcoin now as the supply is decreasing, the market dynamics are expecting the value of each of these Bitcoins to dramatically increase. So my opinion is to consider owning at least one Bitcoin, buying and holding, and then not selling it, and then maybe purchasing more than one Bitcoin, and then buying and holding, and then not selling it. So it's like a three-part plan. So Fidelity has also contributed to venture capital to the other companies researching digital currencies, and they've also partnered with MIT. It's just a lot going on. And so as a mainstream media and financial institutions begin to embrace the potential of cryptocurrencies, and particularly Bitcoin, are we going to see the adoption of Bitcoin, or are we rather going to see the appropriation of the blockchain technology? And it's a really interesting question, and I think it's the answers of which we're starting to see that today. And so I think that if you look at the history, there was a lot of disparagement against Bitcoin And then there's a lot of disparagement against the users of Bitcoin, and there's a lot of disparagement against the technology of Bitcoin, and it went on. And after realizing that Bitcoin couldn't be destroyed, and then they were seeing these other technologies like Ethereum that were coming in after it, the only solution to not have it destroy everything that the existing industries understand is for the existing industries to adopt it, for them to essentially appropriate the blockchain technology to whatever degree in which they can. So again, when we look at the historical context of this, we see the internet being created at a time when AT&T was going through massive consolidation, becoming the largest telecommunication company in the world. And they didn't like the idea of people being able to make a free telephone call from the United States to, from one state in the United States to another state in the United States because of the long distance fees that they would make, let alone, having a free call from the United States to Europe or the United States to the International Space Station. These calls are free now. It totally disrupted the way that AT&T makes money, and there's no way that they would want at that time for this world to have happened the way that it did. But what happened is that it did happen. AT&T wasn't able to control all those aspects of the development of the internet, but AT&T did evolve to position itself in a way that would survive and would use the internet to continue making money in new ways where it stopped making money in those previous ways. To sort of continue that analogy, AT&T now, there have been recent laws talking about the telecoms, being able to sell our internet privacy. This is now, I believe, new law that's been approved by the legislations of the United States government and signed and approved by President Trump. And so now everything that you type into your browser can be sold, but from your internet provider, who's perhaps AT&T, and that could be sold for a profit. Well, now the blockchain technology is coming along, and we're about to have decentralized web browsers with decentralized internet that will give us control of our information again. That will then prevent, it's a cat and mouse game of having balance in the world. And moving forward, seeing the value of fiat money and U.S. dollars decrease, for us to maintain value in the world and for us as people, as common people, to get ahead of the corporations, it's my recommendation that you look into Bitcoin and some of these other cryptocurrencies to get ahead of these other corporations and to get ahead of the tsunami that's coming, the flood, the tidal wave, that the alarm bells are being announced, and we're hearing about it, the start of it, in the mainstream media. We're hearing about it from the banks, and this is the warning that a lot of people have been talking about, and you're hearing it now. So with that being said, let me know what you think. Please share your comments below. Do you think that we're going to hear about it more in the mainstream media? Do you think that this isn't a big deal? Do you think that we're getting ahead of yourself? Do you feel that there's a sense of urgency? Let me know in the comments below. Hit that like button, and I really appreciate you guys watching, supporting the channel. We'll be pumping out some new videos soon. Please stay tuned. Thank you very much, and I'm glad that together we're minting coins.